Good afternoon. Today we're going to talk about allocating 401k plans. An individual who starts a new job and is offered a 401k plan as part of the benefits will oftentimes be overwhelmed by the amount of 401k options available to them. I'm going to talk a little bit about understanding what those different options are and how to allocate to them. One of the biggest mistakes that investors make in 401k plans is identifying all of the funds and looking at the performance and choosing the one with the highest long-term performance and investing everything 100% into that mutual fund. What you'll find is that you've probably invested in a small cap growth stock fund that usually moves a lot more than the market does on the way up and on the way down. So during times of, for example, a recession, an investor might check their 401k plan and find that they are down significantly, causing them to panic and sell their investments. These are the types of things that we want to avoid. Another thing that investors often do in 401k plans is pick a target date retirement fund. These funds are based on a date on which you plan to retire. So for example, if you plan to retire in 2050, there is a target date 2050 fund. These mutual funds work themselves between stocks and bonds based on your age. So if you're a young individual and you pick a target date 2060 fund, you're going to be in 100% equity, most likely. And then as you age, that fund will automatically have less stocks and more bonds. These funds typically have higher fees as the expenses associated with doing that are higher. What you can do is allocate to the different fund options that are available and manage this yourself. There are many different types of funds in there. There are stock funds and bond funds, and there are different types of stock funds are going to be your large cap growth funds, large cap value, small cap, mid cap, and there may be some alternatives in there as well. What you'll notice is the value funds may have names like equity and income or dividend investor. These are all stock funds that will move less than the market. So when the market is up, they will move up less than the market. When the market is down, they will move down less than the market. You also see large cap growth funds. It might be called aggressive growth or the name of a fund and growth fund, very easy to identify, usually are associated with higher returns in up markets and lower returns in down markets. They move more than the market. Most of your 401k plan should be allocated to large cap stock investments. These are the most stable, although value is considered more stable and growth is considered more volatile. And you get down to mid cap and small cap, those are funds that are going to be a lot more volatile. You want to have a small exposure to these funds as they're going to provide you higher returns in up markets. But in down markets, you don't want to have too much exposure there, otherwise you could suffer greater losses than market indexes during down markets. Within bonds, there's also different types of bond funds. You're going to find intermediate core bond fund or core bond fund. This should be where the majority of your bond investments are allocated. This is a bond manager allocating across a bunch of different bond asset classes. And then you can pick some little ones off to the side, like allocate a small amount to ultra short bond fund or short-term bond fund. There's also other ones like floating rate that may be available to you. This is going to be different among different plans. Some plans have many options and all sorts of sub-asset classes, and there are some plans that don't have as many options. Within bonds, it's not as important to get as granular as you may see yourself getting within stocks. Then once you have your allocation picked out, as a young investor, this should be 90 to 100% stock investments. Every decade, you can go in and trim from the stock funds and add to the bond funds, and do this almost every decade as you age until you approach retirement. Hopefully that helps with when you're choosing your investments in your new 401k plan. Thanks for joining us with Timely Topics, and we'll see you next time.